I'm Natalie Miller, and I'm a senior manager with Eide Bailey in our outsourced and managed service group. I manage our Omaha office for our outsourced accounting practice, and then I also co-lead our outsourced FP&A practice that we've termed business planning and analysis. We have somewhere close to 4,000 people in total. So FP&A has been baked into a number of our services. So it's part of business valuation in our transaction advisory group as a function of their other services. It's been a part of our fractional CFO and controller service for quite a while, but it hasn't been a dedicated service line up until a year and a half ago is when we really started kicking things off as its own dedicated service line. Now, those other departments still do it, but this is more of an outsourced managed service rather than a one-time support service. I think just like most firms that are offering CAS, right, we're all trying to move into CAS 2.0, where it's more of an advisory level service. So this was just a natural next step in that progression that I think most people are trying to follow. What we've done though is we've specifically identified a few people to get really good at how we're going to offer this service and what tools we're going to use in doing it so that we can support the rest of the group and bring it to those clients without everyone needing to learn how to do something new or how to do it in a streamlined way. We really just want to be a one-stop shop for those clients, right? So that we can support them in their monthly accounting, but also support them in analyzing their financials and looking ahead and where are they going to be and can their financials support the plans that they have from an operational perspective. So it's more about just being that one-stop shop. Our clients need these services, and so we don't want them to have to go look somewhere else to do it. And just client stickiness too, right? The more that we can interact with them on a regular basis, the more that they're going to think, oh, well, I might have this specific tax or R&D issue, or I'm building a building. Maybe I should talk to Eide Bailey about this too. So it just leads into everything else the firm can offer as well. If we're doing their accounting, we also want to be interacting with them regularly. It's one thing to do a tax return once a year. It's another thing to do their reconciliations once a month, but it's another thing when you're actually meeting with them on a monthly basis to see what else might be going on, what do we need to be aware of, and we can become that business advisor instead of just the accountant. I think so many people are just used to after the fact accounting, and again, a tax return is all after the fact as well. And so even just kind of getting them to start thinking, well, again, let's tie those operational plans into your finances so that you're better prepared. Small businesses a lot of times haven't really thought that hard about that. And so just making that case for them or demonstrating the value for them, I think can be a challenge if you're not already in the habit of having other advisory conversations. So for example, if we go back to like the monthly accounting example where they're giving financials, but they're not even meeting with the client, FP&A is not going to be a great option for them. We need to lay the groundwork first of actually reviewing the financial statements together, talking about the business, and then that can lead into that forward-looking conversation. But you can't jump from minimal contact and coordination to all of a sudden, let's do your FP&A work. You have to build that. And that has to be a journey with our clients where we're getting more and more into that advisory role to begin with. It was something that we knew we wanted to offer more intentionally to our clients in the first place. My involvement in it was mostly I was looking for a better way to budget for nonprofits. They need really good budgeting. They need it to be departmental. And there was not a great way to be doing that in Excel. I was just frustrated with the redundancy and how long it took to do everything. So I was actively looking for a software tool to be doing that. At the same time, Jenny Huteri, who oversees our entire outsourced managed practice, was looking into softwares for FP&A. She'd been doing a lot of work to figure out how we could incorporate an FP&A practice. And we were also hiring an FP&A person who had been in industry for 20 years. So all of that kind of happened at the same time. And we all came together to say, well, we want to do this. We want to do it in a dedicated, streamlined way. And so we did that as a group where we started identifying what are we going to use for a software? How are we going to market this? How are we going to price it? How are we going to package it? And all of that together. And since that was a year and a half ago, and then we've been just slowly building that up over that time period since then. We took a holistic approach to it. We knew that we didn't want to just say, oh, we're going to do FP&A now and, let individual people kind of just come up with their own processes for that, because we wanted it to be something where if someone rolled off a job, someone else could roll on and basically be able to interpret where are we at, when we need to do moving forward. Which is really hard to do when everyone has their own Excel model, because you may or may not know how it works. And you may need to study it for a day or two before you can trace everything through. So we didn't want that to end up being a problem. So we were intentional about getting software aligned first and thinking about how we would want this to be priced and packaged before we really rolled it out. Then we did we did a lot of internal marketing. We did a lot of kind of use cases where we could walk people through, this is what it looks like, this is how it can be used. And we've done a lot of that since. So we just kind of keep chipping away at that. We have some great clients that we're using it for now, and it always helps for people to see it in real life so that they can understand the use cases more. So we just keep demonstrating what we can do from there. We had a couple of tools that we could use to do forecasting, but it wasn't to the degree that we wanted to be able to do it. I mean, you think about clients that need a budget or need forecasting or budgeting, or there's a wide array of what those needs could look like. It could be very simple, but it could also be that they need something complex, at least in a portion of those calculations. And a lot of software options that we looked at could handle the simple, but they couldn't handle more driver-based complex planning. And we've seen more and more of a need for that, or at least the option for that in pieces of the forecast. Maybe their whole forecast isn't super complex, but a part of it is. And we just needed to be able to support that. You can't do that in QuickBooks. We needed something that could be tailored by industry. So we tend to operate in industry verticals, and we didn't want to be starting from scratch every time. So we really liked the idea of being able to create industry templates and then use those over and over again. And we have done that for several industries and been successful with it. We also really just wanted, again, one consistent process so that, again, if there's someone that rolls off, we can fill that in. We can go in and see what was going on, how that forecast was working, what the assumptions were, and everything like that. So that was key, but we also needed it to be able to plan by department. That's been something that we didn't have before other than Excel. And that's been a key thing for a lot of our clients, especially I work in the nonprofit industry a lot. And that's something that a lot of them need or have to have for grants and things like that. So we each put a client in it just to learn the tool better. And so we built out our first forecasts just for our own training purposes. None of that went billed to clients or anything like that, although we are using a lot of those accounts now. And so that has translated into something that we can bill for on the back end. And then we've just been adding accounts as the need arises. So again, constant communication internally so that when they have a request for a budget or a forecast or cash flow assistance, we need them to think of us. So we've continued to do internal marketing. And then as those needs arise, we're building those out one at a time and or using a template to do those things. Looking forward, we're trying to get more clients just on a reporting and dashboarding level within the tool so that when the need does arise, they're already there and it's just something we need to upgrade their plan and turn it on. So that's we're hoping to get more and more on that level because it enables us to do that upsell quickly and spend less time on the initial implementation phase. I think the first part is always, again, that internal shift in the mindset. If you've had people just doing outsourced accounting for years and years, right? Like they may not think to start having those forward-looking conversations with their clients. So we've got to internally shift that mindset first. And then we can go to our clients and say, have you thought about how a forecast might help you? And here, let's look at one together. We can turn that on and show you. So it starts with the internal adjustment first. And then, yeah, we can show that to clients. I think for clients, a lot of it ends up being either they're just interested because that stuff kind of fascinates them and they, they just like to think about strategy and that kind of thing. Those are fantastic clients. We'll have other clients that there's more of an external push for this. Maybe they're looking forward to eventually selling their business. Well, a forecast is going to be really useful for them in those situations. So we have to look for the situations that could give them the motivation to want a forecast. If they're a mom and pop shop that's been going strong for 20 years and nothing's really changing, they probably don't need a forecast, nor do they want it. But if they are a mom and pop shop who's getting ready to sell within the next 5 years, yeah, that changes things. So it's knowing our clients, knowing their situations, and understanding what external pressures might put them into a situation where they would consider it a little sooner than if it's just status quo. I have a client who had always done budgeting by themselves. Honestly, they did a pretty good job at it, which was fantastic. But they had an external push this past year. They were receiving some funding that required a 5-year forecast. So we assisted in that and creating the forecast. But what was fantastic is that the executive director really started to see how this might benefit them going into the budget for the next year. We did some driver-based forecasting for them. They have both participants and students, and that's a big factor on how their revenue is generated. So we incorporated all of that into the forecast, both from a revenue perspective and direct expenses. And when we got done with the forecast and we were getting ready for the next budget, that caused the client to say, I actually want you guys to help with the budget this year. They knew they were going to have some funding cuts and they knew they were going to need to tighten things up. And he knew this would be a um, more exact way to do it than what he had been doing prior. So sometimes you have to have those external pressures to get things started, but then once clients can see it and see what value is there, it can help change their perspective moving forward. And it's been a great client relationship. And I know it's been helpful for him going into this budget year with the funding crunches. I think for them, they need a realistic expectation of what their expenses are going to look like and what they need to be doing for fundraising. And then on the flip side, if they know that their fundraising isn't really going to change, then what do they need to be doing from a cost perspective? We had a client that knew they were going to have some funding shortfalls going into the next year, but they didn't want to drop their expenses that were directly related to the population they were serving. So through the budget process, we were able to help identify for them different strategies. So the board said, well, what if we shift from seeking cash donations to seeking in-kind donations? How much would we need to get from an in-kind donation perspective to still do the same work that we're doing? So diapers was an example. So we were actually able to say, well, right now, this year, you needed this many diapers. You would need to have this many donated or this much value donated to offset those grants that you know you're not going to get this year. So it helps problem solve when there are, again, those external pressures make a huge difference. But also a lot of them need grant specific budgets. So if they're going out to get a grant, they might need a budget, or if there's a budget they have to follow during that year, they need to be able to track all that and it needs to all roll up into the full organizational perspective. Some of our largest projects we have them because cash flow was the primary concern. And it's interesting because a lot of times when we say cash flow issues, we think, oh, like they're struggling. And that's often not the case. It's often they're growing, but they need to make sure that they have the cash flow when they need it, or they need to understand when they would need to draw on a line of credit and how much that line of credit would need to be. All of those types of things can also play into it as well. And yeah, that's a huge factor. I think 3 of our largest forecasting jobs are specifically revolving around cash flow and understanding when they need to have cash and where that cash is going to come from. I was looking for more budgeting, reporting, and things like that. So the custom reporting has been huge for me, being able to pull different types of data, different combinations of financial and non-financial data into an automated report has been wonderful. There's a lot of times where clients really need to see something other than just their balance sheet, income statement, and statement of cash flows. So having that automated and streamlined has been wonderful. Visualizing things on the dashboard has been really key for stakeholders who maybe aren't as familiar with balance sheets and income statements and how to read them. So having trended dashboards has been great. But the forecasting has been the biggest impact for me, especially again, since I do a lot of departmental planning. being able to streamline the process of applying assumptions and drivers across those departments and or being able to tweak for individual departments has been wonderful. And again, the flexibility in reporting on those. So a lot of times if you're going to create a forecast in Excel and then, the CEO asks for a different view of those results, it's going to take a couple hours to build out a new tab, pull in the right data. Maybe it's just summarized. Maybe it's a visualization. In Giraffe, it's just a few clicks in the reporting package to change how you're looking at it. We had a dedicated account point person in terms of questions for the product, and we met with him weekly for a very long time. And in fact, now we still have biweekly optional appointments. So it's been nice just to have him on hand as we had questions. They have built out their training functionality. We've had a few people go through that lately, and that's been helpful with a very prescribed way of learning the tool. And so that's been definitely helping us. We needed to get more people up to speed. Uh, we have direct contact with a few individuals there, which is great. Because when we do have a concern, there's a handful of people that we can reach out to and talk to. And I actually just had a meeting with the CEO last week when we were at Digital CPA. So it was great just to connect at that high level, be able to provide feedback, but also hear an update on where they're moving now. I mean, it's funny at Digital CPA, there were a lot of sessions on AI and how as we move into using, I think they called it agentic AI, more and more of our base level bookkeeping tasks will be able to be handled by that, which is going to give people more and more time to focus on this higher level advisory work. So it's just going to keep growing, and it's going to create um, that career path for people who maybe aren't going to need to be reviewing recs in as much detail or for as much time in the future. We're not there yet, right? Like AI is not going to change everything tomorrow, but it is all coming. And I think the advisory level is going to become more and more of what CAS is because of that. I would say it is a great software for, like, I would look up the integrations that it works with. We're using a lot of QuickBooks Online, so it works fantastic for that. Um, Clients that are single entity that need some level of forecasting, it's wonderful. And I would even broaden that to single entities that need any reporting and dashboarding. I would put them into Giraffe because it gives you that option to move into forecasting or budgeting down the road. So it also integrates with Xero, Intact, NetSuite. So it's great for all of those as well. And that's where we're focusing our efforts on getting those clients into it.